It's the queen from Queens with the money when it matters for you and I.
Hey guys, this is your girl Paula, the queen from Queens. Thank you P. Scott Productions for my theme song. It's the queen from Queens. I just love it. I just came off my walk and I played that theme song no less than 2 times to get me pumped up, so I love it. This is Money Minutes That Matter. It's a talk show where you call me with financial questions and I'll give you financial answers. On this show, you and I become accountability buddies. Accountability buddies. We walk hand in hand to eliminate debt, to help you maximize your financial future, and to optimize your health. I'm a healthcare professional, and November is open enrollment for health insurance. This is what I received from my employer, and it talks about the benefits that's available to me for 2021. Open enrollment is from October 27th to November 16th. This package gives me a plethora of opportunities. I can purchase different healthcare plans, dental, vision, optical plans are all involved in that. I can also purchase additional life insurance as well as legal insurance, long-term care insurance. There's a host of options in here. Going through your employer, I work for a large corporation. They can buy the big piece of the pie and fracture it off for us so that it's less expensive. So this is open enrollment for Medicare as well as Obamacare. So we need to talk about the cost of health insurance. There's a plan that's called high deductible health plans. What does that mean? Just what it says. In the beginning, you have a massive deduction. So starting 2021, the minimum you'd be paying out as a single individual is $1,400. As a married couple, you may pay $2,800, but those numbers can increase as high as $7,000 for an individual and $14,000 for a family. Those are real numbers. Who has $14,000 to put out? That can be just getting your tonsils removed. That can be you getting involved in a motor vehicle accident and you're hospitalized for a week. There goes your $14,000. This has to be paid prior to your health insurance kicking in. That's real money. We need to talk about these plans. My phone is constantly inundated via email, via text. Enroll, enroll, enroll. There's so many commercial insurers that we don't know which way to turn. I have an expert here. I have a friend who's going to be talking to us on the show about Medicare Part A, Part B, and talking about commercial payers. Don't get tricked. You've got to read the information. Don't make mistakes that will cost you and your family your financial future. My show is primarily brought to you by EAJ1023radio.com. I love you. Let's get on with the show. We have Jennifer. She's an administrator of the Greenbelt Endoscopy Center in Lanham, Maryland. Hey, Jennifer.
Hi, Paula.
This month is open enrollment for all types of insurance. I know that my organization sent me the information to re-enroll for next year's benefits. So this is also Medicare enrollment and enrollment for Obamacare. Is that correct?
Yeah. That's correct. Medicare already started in mid-October.
Okay. So there are different forms of Medicare. Medicare, you have Part A, Part B. What are the qualifications for getting Medicare?
Medicare, so you know how people work, then they have 4 points a year that accumulate to 40 points, then for the whole entire career years, they will be qualified to get Medicare when they reach the age of 65. Now, there is different parts of Medicare. There's Part A and Part B. So Part A is when whoever reaches 65, they are entitled, if they earn 40 points from their career life, then they are entitled to get Part A. They just need to go apply for it. Now, Part A, Medicare cover hospital bill only. So they do not cover anything outside the hospital. So people need the Part B to get the coverage, such as going to see doctors in their office, go to get their lab work done, the X-ray done. They need the Part B.
Really? I didn't recognize that Part A was only for hospitalizations.
Yeah.
So if
Part
you're
A actually is free. People just don't know. They need to apply as soon as they reach 65. They go to this social services, and then they're going to help them to apply.
So through Social Security Administration, at the age of 65, it's free to apply for Part A.
Part A, yeah.
But
Now, most people, they are still working, employed by the employer. Most likely, they can be covered by the commercial insurance through the employer. Now, there is a trick for that. So Part B, you need to pay. People need to pay for it. They calculate based on the age. If you reach the age of 65, you are qualified to get Part A as well as Part B. Now, if people want to wait not to get Part B for a acceptable reason, meaning they are still covering by a commercial payer through the employment, they can wait until they retire from the employer, then they can go to get Part B without penalty. Okay, Medicare does penalize people. How do they penalize people? Is that when they calculate at the time you apply. So if you're applying at the age of 65, the premium is calculated based on the age of 65 without any penalty. If you pass the age of 65, you are not under those qualifying events, such as if you are not employed at that time, and then you just want to save money not to get Part B until you get sick to get Part B. At that time, let's say you want to enroll at the age of 69. Then, if you're not under those qualifying events, then Medicare will penalize the person. How? You don't need to pay a penalty, but they will increase the premium to the point that they believe that it will catch up with the penalty. Meaning, your lifelong is going to pay for the penalty as long as you have the Part B.
Wow. So how do you avoid this penalty, Jennifer?
You got to understand the rule, okay, and understand at that time the life situation. So if people are still working, then if the employer is paying for the health insurance, the coverage is pretty good. That is cheaper than what Part B can cover, because Medicare Part B does not only cover the outpatient office visit, the lab and the imaging, those are general services, but they do not cover medication. So people will need to get another plan to cover the medication, which is Medicare Part B. Now, Medicare Part B, they only cover 80% of the bill. So there's 20% co-insurance, which meaning 20% of the bill, the patient will need to pay out of the pocket. If the patient does not want to pay the 20%, then patient need to buy another policy. We call that supplemental policy, or medical term, Medigap policy.
Medigap, okay.
Right. So they will really need to look at the time they are qualifying to get Medicare Part B, so they will do a little bit of the calculation.
So let me see if I get this correct. You're saying Part A, you're qualified just because you're 65, but that only covers hospitalization.
Right.
Part B, you have to purchase, and it's determined by if you're currently still employed and you have a commercial insurance, or you have to be penalized and pay a higher premium to cover the cost of receiving Part B from Medicare. To me, this sounds expensive. This sounds to me, if you're on a fixed income, how can you afford to pay these premiums if you have no incoming income except Social Security or maybe some form of a pension? How do you afford that?
Well, so depending on the total income that people has earned. So if their income is low, of course they are qualified for Medicaid. Let's say if they really went on a low income, they should check with social services whether they are qualified to get Medicaid product. So once you get Medicaid, you can still get Medicare in the future. So Medicaid, well, of course, it will offer a variety of the services like any other plan, but without you paying a premium. Now, Medicare, most of the people think they are expensive, but let's look at the general medical condition of age 65 and above.
Okay.
People need to understand their whole body, the medical condition, and as well as their family history. Let's say if they are very healthy at the age of 65, they are active, so they don't have hypertension, diabetes, high cholesterol, they are really considered healthy and they are active. And then now you're looking at how likely you're going to get those diseases as you're getting older. Heart disease, stroke, thyroid issue, some chronic illness that require a long-term medication program, or some medical illness will cause more complication as they get older, or when the disease is not under control. Then at that time, everything becomes expensive. Most of the plan, if you don't get it before you get this illness, later on you have problem. Then you have a problem of choosing the Medicare Advantage program. So we don't call it Part B, but Medicare Advantage program is offered by the commercial payer and using Medicare guideline. So people think they can get a Medicare Advantage program to prevent buying a lot of portion of it. Let's say the supplement, the Part D medication plan. But the catch is the commercial Advantage plan, they could have a lot more limitation, such as you have to go to get a referral from your primary care, or they have certain limitation of services. Let's say if you want to do a CT scan, then you will have to do a plain X-ray, go for a basic level first before the provider can offer or order some more advanced procedure. So there are limitations, and the whole entire premium may not be cheaper.
So ultimately, Jennifer, we need to decide based upon our age and our income, which is the best care factors for us. But when you have all of this information, you have all of this medical lingo, when you're on social media or when you're on television, you're constantly being barraged with ads. Buy this type of insurance, buy that type of insurance. How do we decipher all that?
Okay. Do a little more research. Don't just listen to one person or depending on one's resource. Just remember, there are buyers of the other side. So the broker will always sell you something that in their favor, whatever that could be meaning to that person. So they may not understand the buyer, the medical condition, and the actual need. They're just simply selling you people a plan. So, but all this information is available. So when people shop for their health plan, they really need to look at a lot more details rather than just like how much I will pay, my monthly payment. Most people, they make a mistake. The first thing they tell the broker, I want the cheapest insurance that I pay nothing out of the pocket on a monthly basis. That I will take it. So therefore, most brokers know this is most preferences from the people. So therefore, they sell them the cheapest plan. However, the plan does not cover a whole lot. Or the plan has a high deductible plan, or paying more money because you missed the time of enrollment.
You know, this is great information. And, you know, listening to you, it reminds me if you're going into a used car lot and you tell the used car lot person, I can only afford to spend $300 a month. But what they don't recognize is $300 a month stretched across 6 or 7 years. You're still paying more because of the interest is what's building up. So this is called buyer's remorse. Same thing with health insurance, which I didn't know. You get stuck at the end because you're paying no or low monthly premium, but your out-of-pocket costs and your deductibles far outweigh what you're saving for the monthly cost. So let's talk about real quickly about Obamacare.
Okay. Obamacare is designed for people that they cannot get insurance elsewhere. They can buy it by themselves. And the premium usually is based on the age and what kind of plan you want. But however, the government will give subsidize some money depending on the annual income. Now, to make it easier to understand, if people have the access to go to internet, just feel free to play with it. It doesn't cost any money, but then it gives you a lot of understanding. You don't have to buy the plan. Anybody does not know insurance, they should go to look at this plan. Go to the website called marylandhealthconnection.gov. Then you just follow the question and answer. Then you can see what kind of plan that you can get and how much will that be each individual plan. And click into the plan, then you will see how do they cover it. The information are very detailed and fair. There's no hidden information. Now, my own mother, I can give you an example. So she's not qualified to get Medicare because she didn't work 40 points. So then, I got this Obama health care for her. So her income was $13,000 a year. So I chose the plan that actually give a lot of good coverage that she doesn't need to pay out of her pocket. So every time her copay, when she go to see doctor, she could pay $40 copay. The rest of those 100% coverage.
Tell me lastly, is there an enrollment period we should be looking for?
Now, Obama Healthcare, they start enrollment in November. So enrollment November until end of December for the coverage of January of next year.
I love this. This is great information because people need to know that there's no blanket coverage. There is a cost to living. There's a cost to having insurance or not having insurance. There's always a cost. So, Jennifer, I appreciate your coming on my show and giving us this information. Thank you.
You're welcome.
Okay. We have Denise from Bowie, Maryland on the line. Hi, Denise.
Hi, Paula. How are you?
I'm good. How are you?
Good.
Good. What can I do for you today?
Well, Paula, my question for you today is I currently have $9,000 in debt, which is one credit card. It's a 0% interest, which I transferred, and February of 2021 is when my 0% interest will be over. Mm-hmm. So I don't think I'll be able to reach paying the whole $9,000 off. So what would you suggest on how to pay the remaining balance?
Great question, Denise. Okay, let's talk about you first. So Denise, Do you work full time?
Yes.
So you have a $9,000 credit card. Any other credit cards?
I do, but no, I pay them off every month, so the balance is in a running balance. So the other credit cards are zero.
Okay, so they're at zero. How many credit cards do you have, girl?
Just a couple.
What does that mean?
I have a Lowe's, so if I have any home improvements, I might get supplies, and I might have 6 months of zero APR, so I'll get the supplies and hold on to my cash, but pay the bill monthly. Mm-hmm. Or I have a Macy's, use the advantage of getting extra percentage off, but, shop and pay off.
You have a Lowe's for home improvement and a Macy's to get the percentages off.
And then I have Costco.
Costco. Must have a Costco.
But Costco is a cash back.
So you have $9,000 in credit card. Any other debt? Do we have a student loan? Do we have an automobile? We have mortgage?
No car, no, just mortgage.
Okay, just the mortgage. And mortgage is what we all have. Okay. So let's talk. First of all, when you got that 0% interest that's ending in February of 2021, how many months did you have to pay it off?
I'm thinking it might have been 12.
12 months.
I'm not sure.
Okay.
Yeah, it might have been 12.
And how much money did you put onto that 12-month interest-free card?
So I started at 15,000. But now I'm down to 9.
So 15,000. So you've paid off 6,000, which means you paid about $500 a month. Am I correct?
How much?
$500 a month.
Yes.
Okay. So there's no interest on that. And do you recognize that you had to pay a percentage of what you were borrowing?
Yeah, but I think a grand total, I might have paid maybe 300.
300 or 450, right? Because typically it's 3%.
Right.
So either 300, 450 is probably what you gave them.
But I figured it was less than what I was paying at, a 21%.
I'm sure it was. But do you know what happens when your 12 months are up? What happens to that percentage?
It'll all come to the end.
It'll all come at the 21%.
Of what I don't pay off.
So, and credit cards are oftentimes not like store cards. Store cards, if you go to your Lowe's card and you take out a $3,000 payment and you got 6 months to pay. Macy's, if you take up a $3,000 charge, you got 6 months to pay, you don't pay it. They amass all of the interest that accumulated from the beginning and they dump it on the end. Right. Credit cards oftentimes don't do that. But when your term is up, it jumps from 0% interest to 18, 20, 25, 27% interest. So that's the bite. Right. So now potentially with that $9,000 in debt, you need to make a decision. So let me tell you some of the tricks of the trade.
Okay.
And this is why I always say debt is a disease that can be cured. So with Macy's, they give you coupons. They give you coupons all the time in the mail, at least every quarter. 20% off, spend $50, get back $20, right? So it's telling you you're getting, significant amount of savings off. But ultimately, they know 80% of the people aren't paying it off at one time. And what that ultimately means is they put you into a machine. If the banks are in a machine with money fluctuating all around, and they say, if you do nothing, you're guaranteed to get 80% of the people that you've lent your money to not pay you in full. So you can do nothing. You can try to grasp at that money in the air, or you can do nothing. If you do nothing, you're guaranteed 80% of the people are not going to pay it off on time. If you do a little grasping, maybe a few of the people, 85% won't pay it off on time. So ultimately, you're now potentially going to fall within the 80% of people. People say, oh, I pay it off on time. But you've paid off your other debts on time, but you still got that $9,000, which could potentially stick you. So your options are one of two. One, either you refinance into another 0% or a really low interest loan and pay another $300 or $400 to get this for another 12 months, or you aggressively pay it off.
I mean, I might can increase it to maybe $1,000 a month, but that's still will leave me with
$5,000. Yeah. So you have a decision to make, because ultimately, if you keep going in a cycle that you're going in, the banks are still making their money. The banks are going to always make their money, because if they don't get anything from you in interest, they already got $450.
Right.
So they're not losing. So if 1 million people do what you do every year, just keep going to lower interest or 0% interest for 12 months, 18 months, the banks are saying, I'm going to charge you a minimum of $300 or 3%. So if 1 million people do that, they've already amassed $500 million just for this reason, for nothing else. No interest, just for the fees up front. You see what I'm saying to you?
Right.
So they're making their money. They can't lose. So either way you do it, you're going to have to do something different.
Okay.
And the reason that I don't love having people go into these yearly cycle of doing 0% interest is because they don't change their habit. Everything is a mindset shift. So you're going to have to learn and grow on cash. Real talk. So
right.
just reinvesting your money, getting another 0% interest, paying another $400, yeah, that's less than paying 21%. But if you do it each year, you're losing $300.
Right.
So what I'm encouraging you to do is hustle. If in the next 4 months you can pay off $1,000 a month by hustling, doing, additional shifts or whatever, if you can get that paid off to $4,000 remaining, then you've got to be really serious over the course of 2021. Get out of debt and stay out of debt. Whether you take this $5,000 or $4,000 remaining and you take it and put it into another 0% interest for 12 months, you have to be in a position where when the 12 months are done, they're done. And you got to cut up the cards. I know Macy says use a card, you get 20%. But let me tell you this. If you take the amount of the shirt, let's just say the shirt costs you $25. $27 with taxes. If you take a Macy's gift card, put the $27 on the gift card, give them the coupon, you get the same discount. That's what I do.
Well, you'll be proud of me to know. Mm-hmm. Matter of fact, last week I went to JCPenney and I bought some items and I used my card, and right then and there I paid the card right after.
Yeah, and that's what I want.
I pay it right then and there. So basically, all in the same visit.
And that's the ideal thing to do. But what I'm saying to you, Denise, is you can't buy anything. You can't go on vacation. You can't go to dinner. Nothing else matters until you get rid of this $9,000. Nothing.
Okay.
Everything is on freeze frame. We have Jody Jackson from High Point, North Carolina on the line. Hi, Jody.
How you doing, Paula?
I'm good. How are you?
I'm great.
I'm good. Well, welcome to my show. What can I do for you today?
Well, Paula, what I was calling you about is that I have a restaurant called J&J Crab Spot in High Point, North Carolina, just recently opened during the pandemic. Because I have a teenage son that was getting in some trouble, and I just want to make sure that he have an outlet to go to and things to do. But not only just to keep him out of trouble, but also other children in the community and family members. So I'm working with teenagers, and I want not only to give them a job just to have a little salary, but I also want to empower them about being entrepreneurs and knowing about their credit and financial stability, and so this way when they're going out there into the world, the working world and the financial world, that they'll have the information that they need that I was not aware of when I was a teenager, to keep my credit score up and not to be in a lot of debt. So I just want to see the information that you can help me to give to them. This way they will be able to be empowered and have the opportunity to have this information, because the children are our future.
That's true. That's true. Okay, so let's talk about you, Miss Jody Jackson of J&J Crab Spot. Now, I live in Maryland. I knew nothing about crabs and crab cakes until I moved here. I'm thinking, what's the big deal? I've had salmon cakes all my life. What's the big deal with a crab cake? When I had a Maryland crab cake lump to die for. So, do you make crab cakes in your crab spot?
No, not as of yet. I'm still working on some things, but no, I don't do the crab cakes as of yet. But I do the seafood macaroni and cheese.
Ooh, what is that?
Oh, it's like you said, the crab cakes to die for, the seafood macaroni and cheese. It it will make you want to be resurrected.
Well, I'm not dead, so you gotta die to be resurrected, so I'm good. I'll just eat it. Okay, so let's talk about you, Jody. So you own a restaurant called J&J Crab Spot, and you just opened it during the pandemic. That's amazing. That's a leap of faith, and I hope everything works really well for you. So how old are you, Jody?
Well, just turned 53 in August.
You're 53. Congratulations. Happy birthday. Happy several months belated birthday.
No problem. Thank you.
Okay. Now, you are 53, and this is your establishment. Now, what are you doing for yourself? Do you own your own home? How are you paying for your business?
Well, no, I don't own my own home yet. I jumped into a business before I jumped into a home because, see, the business will allow me to have capital money to buy a home. That's why I don't have to be in a lot of debt.
Yes, yes, yes. Okay, how are you financing your business?
Well, actually, I furnished my business with my own money that I had, so I didn't have to go to the bank to borrow. And I was able to buy all my equipment cash straight out. This way I won't go into a business with debt. This way my money is my money.
I love everything that you're saying. I started this during the pandemic as well because I want to empower people to own their own and to do their own, and you're doing just that. So power to you. So what are the ages of the teenagers that you want to empower?
Well, I got into the business to empower my nephew that's recently deceased. But I want to empower the ones that from 14 to 17 years old to give them the outlet.
Okay, so how can I help you then?
Well, you can help me by maybe giving me some information that I could pass on to them, or maybe you can find a way that you can talk to these teenagers on a one-on-one or in a group for me to give them the information that they need so this way they can be successful as well. Not only just hearing it from me, but also hearing from someone else that, like yourself, have to show that you're talking to many people with financial outlets. So I think that you would be the exact ideal person that they need to speak with.
So you want me to give your teenagers a financial empowerment and literacy conference?
Yes.
I think I can do that. The goal of Robert's Target Financial is to empower young people so that they can recognize they don't have to conform to what society is telling us that we can and cannot do, but we can empower them. And I think the best start is what you're doing. You're letting them see that it can be done. It can be done in cash. It can be done with willpower and strength. And you're smart because you're now building your own so that you can now finance your financial future. So I got to tell you, Jody, I'm proud of you. And I'd be more than willing to host a financial conference for the teenagers in your facility as well as the teenagers in your community. So absolutely. Now it's time to say goodbye. This is always the toughest time for me. We've received a lot of information. Enroll for health insurance. Don't take it for granted. Read everything. We got your back. You need a hand, give us a call. We'll help you to interpret your information. This is tough. This is a tough season. The election has just happened, but we can't allow any candidate to take our vote for granted. As Ice Cube has been saying, he's all over every social media platform. He's on radio, he's on TV. He is doing his thing. He says dollars for dignity. No one has the right to say they have our vote in their pockets. Work for my vote. Earn my vote. You are responsible to me because I am a tax-paying American citizen. I have rights, and we need to know our rights. We have to be empowered to prosper. And for that reason, I am hosting my first financial conference. It's going to be free to a limited number of people. Save the date, February 20th, 2021. I'm going to empower you to move beyond being in debt, to maximizing your financial future and to optimizing where you are, where your family is. Why is it important? If we can empower you, we can empower your family, you can empower your community can affect change in the schools, in the social and political structure. This is our time. Save the date. February 20th, 2021. It's going to be jam-packed with brilliant people. I have CEOs, CFOs, I have professional athletes, I have a humorist, I have a vocalist, and our own Mr. Eddie OJ of One Man, One Mic is going to be rocking the wheels of steel. It's the Queen from Queens. I am so excited. Why am I excited? Because I'm walking by faith. As I said, I started this show during the pandemic. It was fearful. I'm a professional healthcare provider. I've been given anesthesia for more than 20 years. This is what I do. I love what I do. I love the community that I serve, and I love when I do it. But I've been called to do more. So if putting my life on blast helps you to recognize that you can get your piece of the pie, then I'm doing my job. So save the date. I'm looking forward to seeing you. This is our time. I'm the Queen from Queens. Have a great day.